Hello guys, hope you all are doing well. Welcome back to Trade FX with TY Markets Weekly Analysis. So let's see what we have for the month of June. So the market closed yesterday with the last day of the month of May candle. So let's see what the market is going to open with the June candle. So we are expecting a new monthly candle for June. So on my first currency lookout for next week, I usually like to look at the dollar index first to see what's going on dollar, especially if you're someone who trade gold like me. So let's see US dollar index. Okay, so let's go to the monthly time frame. So if you're my students, you already know why we are starting from the monthly. There is something we call top-down analysis, where we start from the monthly and then work our way down to our entry level on the 4-hour or 1 hour. Let's see. Okay, so this is the monthly candle. Okay, so let's go back to DXY again. I'm not sure why it's changed. Okay, so this is our monthly candle, our monthly analysis. So let me take out some of the supports. So as we can see on the monthly, DXY was on an uptrend. But if we zoom in, this is the powerful thing about let's see, about checking on the computer, so you can basically see the market view. So if you zoom in like this, you can see the market was actually on a downtrend. Dollar has been on a downtrend since 2000. Oh my god, since 1985. That's crazy, because all this candle represents what is it called, represent monthly. So it's been selling. There was a retracement here to this resistance level right here, and this was the last low. This was the last low. So markets broke the last support, but went back to this level, and it was supposed to break this resistance. If markets have broken this resistance right here, then we may say the trend has changed. But let's zoom back out to see. So this was a fake breakout right here, because as it broke this level, it was supposed to continue selling down, but it broke out a little bit and then went back up, started playing around, and then went back into the trade, into the resistance level, and it's trying to come to this area right here, but looks like market could not, and it's been playing around here, formed another. I'm trying to zoom in so you guys can see very well now. Okay, so as we can see, markets failed to break this resistance. It came back to retest this level, and it tried to go back up, trying to go up here again, and it failed, and it actually broke this resistance level. From what I see, dollar is still bearish. I'm still bearish on dollar. So let me put another resistance line here. So like I said, I think it actually broke out of this resistance level in April, and this is the main candle. So dollar did not even do much in May, and that's why the market has been it's like the market is consolidating most of the month of May, and that tends to happen a lot, especially when we are getting close to summer. Let's see what June is gonna look like. So we have seen that market broke out, like I said. So we'll go down to the weekly charts, and we have our resistance here, we have our support level here, and we also have a resistance here where market broke out from, and it actually serves as a resistance over here as well, as you can see, because the market broke out from this line, came back to retest, and then broke out. So let's go to the weekly time frame. Let's see the weekly. And even on the monthly, we can do some to confirm our bearish bias. We can do something like this. Let's see. We can use the trend line. So we can use the trend line, and then we can see that the markets broke out from this support right here. And then when we go to, see, and this trend line can even go all the way to, let me see if I can zoom in. Okay, as long as it's 2 touches anyway. So there was a touch here, there was a touch here, and there's now a breakout. So let's go to the weekly to get more details. Okay, so perfect. On the weekly, we can see the market broke out and then came back to retest this trend line perfectly, this trend line that I drew perfectly, and there is a bearish candle after this rejection, after this inverted hammer candle. And okay, so I'll be looking to sell this market, actually to sell dollar. So let's go back to daily time frame. Okay, so this is the same trend line. Market broke out, came back to retest, and you can see this huge bearish candle. This was Thursday and this is Friday. Market didn't even really do anything yesterday, Friday. So if I'm selling this, if I'm selling dollar, I usually don't trade dollar anymore. I just use it as a confluence for other pairs. If I'm selling dollar, I will sell it to this support level on monthly. Let's see, this support level that I drew from monthly right here to this level. But like I said, market is not just going to come straight down here unless there is a heavy selling pressure. So if I want to take profit, my first take profit will be, if you're a day trader, let's see, there is a support here. My first take profit will be the $94 area. You can see that the market tested that area before going up here, and the market tested that area so many times. So it will be the $94 area, and if it breaks this level, as I taught you guys, trading in the zone, it will come to this level. So, and if you are using the what's it called, the Fibonacci technique that I showed you, you can come here. This is the first thing, is the Fibonacci retracement on a downtrend. Place it from the last high to the last low, and right here you can see the market pulled back to retrace this 68% level. So one thing I love about this TradingView Fibonacci level, it gives you more details as well. MetaTrader will only give you up to 61%, but TradingView will give you still give you 78, 114%, and all that. It's more detailed. So it's retraced to even almost 78, the 0.78% level. So as you can see, if you're using the Fibonacci, you would have sold here to this level, from this pullback to this level. But like I said, from the breakout of this last level, the market should definitely come here, and if it breaks here, it will come to the 89% level. So let's just delete the Fibonacci retracements. So if you are selling this market, like I said, if you are someone who trade dollar, so you can go short here. Just put your thing here. So my overall take profit will be here, but like I said, if I'm trading this, I will first look out from this level, because market may come to this level and continue and reverse. That's why you don't just want to put your take profit here. So my stop loss will be at this last month's candle. So that's it for dollar. So since we are bearish for dollar, Then if we look at if dollar is projected to be selling, so definitely I'll be looking for buys on other pairs. So let's see, on euro, pairs like euro USD. So let's see, this is the monthly, and for so I'll come to euro USD right here. This is the monthly. So let's see, so let's mark out our support and resistance. Let's see, from the monthly. So there's a support here. Market broke out from this support, came back here, came back into the level, and it's now came back to retest this support level. And from what I see, markets should go back up here. Like, this is very easy, like easy peasy. The market should go back here on the monthly to 12555. So let's go down to our lower time frame. Let's go to the weekly. I don't know why this month this time frame thing does not work sometimes. Let's see, just hang. Okay, so let's go to the weekly. So as you can see, there was a breakout from this level. So on the weekly, I'm going to put another support here because price broke out from this level, right here, and it came back to support to retest this level. I think I actually called this buy last week on euro USD. I took some buy and we made some profit with my April students. Yes, if I remember. We traded it, and go back to the daily. As you can see, this is the resistance that we map out that on the monthly, that we are projecting that market will come to. So I'm on the daily time frame right now. So this is to get more details. Let's see if I can see that. And if we are to look from the monthly, another confluence is, you can see there is higher high, there is higher low, there is higher high, there is higher low. So the market has been on an uptrend. That's another confluence for you right there. So you can see that the market is on an uptrend. So the market tested this resistance right here, broke out here to retest the resistance again, and it just retested that resistance. And my first take profits will be this level, this last daily level. If you're a day trader, that will be your first resistance. Remember, this is where price is still going to. But if you don't want, because that may take months or weeks, so if you don't want to hold that long, you just want to trade for the day or 2 days, so you just look down. Let's go to the 4 hours. Let's see. So let's calculate how many pips. This is about from here to here. Let's see if we can measure. Sorry, let's see if we can measure the pips. Okay, I think that can be done on. Okay, let's see how much pips if we buy from here to here. If we buy from the current market price to this level. This is the current market price, and our take profit, our stop loss will be under this level. So that is risk reward of 1:2. That would be 234 pips. So 234. So if you are buying from the current market price and you are to this level, if you use 0.1 losses, that's 234. If you use 0.5, multiply by 5. And if you use 0.001, less than the minimum loss size, just divide it by 10. That means if your account balance is very small. So, but let's just say from 0.01, $1 per pips, that is $234 if you are buying euro USD. So that's my projection for euro USD. So GBPUSD, let's look at GBPUSD as well. And then, like I said, if I want to swing it now, I'll just bring it to this level. So I'll be watching if markets comes to this level. Instead of, let's say I want to buy with 0.1 loss, like as I have taught my students before, I won't put 0.1, I will put 0.05. So when market gets to this level, because market may get to this level and still decide to come back and retest this trend line. Like I said, market can retest a support as much as they want, and it will be painful when you're already in profit and the market comes back to retest the trend line again. So that's why you want to take profit. I will take half of my profits here, and then if it breaks here, I'll wait for it to come back. I will leave half. I'll wait for it to come back and retest this level. I will add another, what is it called, another position only when I see that it breaks out, and then I'll continue to ride it out. That's how I trade. That's how to make. And if I want to flip too, that's exactly what I do too. When market breaks a resistance, I'll keep adding position. I'll be looking for other support and resistance on the smaller time frame too. So like I said, but let's bring it down here. Let's just bring it down here, and then we'll go from there. Let's see. If I'm looking for, if I predict that Euro USD is going to sell, that means GBP USD if I'm predicting GBP and Euro USD will buy, that means GBP USD will buy as well, because they are all positively correlated, as I taught my students. So they are all positively correlated. GBP USD, Euro USD, AUD USD, that's Australian dollar. The only thing is that Australia may move slower sometimes because their own time zone is different from everyone, so their own market time section. So let's say GBP USD market time section, London section, it opens in the morning like 8 a.m. So it tends to move fast, and the GBP AUD USD may be slow at that time, but the most correlated one is GBP USD and Euro USD. So as you can see as well, GBP USD is on what is it called, is on uptrend on the 4 hours as well. So let's see. So market did a fake breaker, same thing as in on Euro USD as well. So let's see. So let's see, let me just do this real quick. Okay, so markets bought from this support, almost retested it, went all the way up, came back to perfectly retest that support level. So same thing, my take profit will be, first take profit will be here from the resistance the market sold off. That should be your take profit. And if you break this level, then you keep buying. And how do you know where it will go to? Top down analysis. Go to the monthly. It will give you the long time view. Perfect. So the long time view of Euro and GBP USD is this resistance right here. So if it break this level, it's definitely coming to this level. So let's go back to the 4 hours. So I'm just going to put my long position thing here, long position here. So that means we are buying at the current market price to this level, and that's how many pips right there. Let's see. And we'll put our stop loss under this support. So that's 2.52 risk to reward of let me see, almost 2 risk to reward of 2.5%. It will tell you risk to reward 2.52%. So if you are buying the market from this current price, that means you are risking let's see, with 0.1 lot size. Does it tell us here? That means you are risking, is this $51? I think it's $51 if you are using yes, if you are using 0.1 lot size, that's $51, and you use that to make $130. So I feel like it should be more. Okay, and if it breaks, this is like 1,000 pips from here to here. It's even more. If we are to calculate, let's say we put it to the resistance here. That's that's 1:15 ratio. That's crazy. Yep, that's 780. Okay, so that's 4,800 pips. Yep. So if you are to buy from the current market price and market goes to this level, so that's with $1 per pip, that's $4,822. But that may take up to like maybe 3 to 6 months for the man, depending on the liquidity. So, but like I said, if you cannot hold to that level, you can be a day trader here. Because let's go back to the monthly. You can see how long markets took to get to that level before. Let's count the candle on the monthly. So this is the current market price. Wow, actually from the last time markets came, move from here. Let's see, 1 2, so 1 2 3, so 3 months. Within 3 months, like even 2.5 months, markets go here. That's a pretty good one to make 4,800. That with just $1 per pip. Imagine doing $0 per pip. That's 4,800 times 5. That's money within 3 months. Okay, so let's just go back to our analysis. So 4 hours. So like I said, this is my prediction for GBPUSD. To here, and I'll be watching to see if markets breaks. I will take my profits here, first profits here, and then go down to, I'll be looking for, you can look for entry on 1 hour as well. Let's see if it's the same thing here. Okay, so in fact this is the perfect thing. And make sure your stop loss is not too tight, because some people, they want to make 200 pips, and then they want their stop loss to be 10 pips. Tell me tell me how that's possible. It can be possible unless you are lucky though, because the market can just decide to come here and form a double bottom, and then if your stop loss is too tight, it will just take you out, and then before you know it, it will go your way. And like I always say, that thing is very painful. So make sure your stop loss is not too tight. Always calculate from your entry, so that way you determine the lot size. That way you'll be sure that your stop loss, your account balance, can carry the stop loss. It's not about profits, it's stop loss that matters, like I always tell my students. So make sure you are calculating here. So, and let's see, so that's for currency pairs that I'm looking at, and USD JPY. And if DXY is selling, that means USD JPY USD card will be selling. So that's why I said, if you are my student, you should already know these things right now. As you can see, let's go to the monthly. So USD card. So when you do analysis for some pairs, you don't really even need to stress yourself for some other pairs that they correlate. You just know that you are looking for the same thing. So as you can see on the monthly, there is a first support here, another support here. So you can see on the monthly there is a double top here, and market sold, came all the way down, tried to break that bottom again, but it failed. The market was like, where are you going? It dropped back down. So USD, because USD is weak. All right, so let's see. So this is the whole candle for this market last minute. So this market may come to this first support, and if it breaks this support, it's going to come to this support, and if you break that support, it's going to come to this support. Trading in the zone, right? So let's go to lower time frame. Let's go to like daily to see. Since we are already bearish on, let me delete this. So I was in this sell. I took a sell last, I think, was it Thursday? But we took profits when there was, I think there was news yesterday. So I told my students to close. So the reason why we sold this, my May student, I traded it with my May student. So as you can see, this is the resistance I did from monthly, and this is the current resistance on the daily. Market broke out from this, so from this level, and we can even call this like a head and shoulder pan. This is the right shoulder, this is the left shoulder, this is the head, and this is the neckline. Market broke out from the neckline. I'm talking about chart patterns right now, and then now retested that neckline, and then now it continues to sell. It's selling down. And if you are using Fibonacci, that's why I said everything aligns. If you are using Fibonacci, just look at the last high and bring it to the last low. So markets went back to it. No. Let's do it from here. Let's say the current market price was this level. I think there is a support right here. Okay, so markets went back to retest the 50%, perfectly retest the 50% level, and then now it's has broken the resistance. Let me go back so you guys can understand what I mean. So market has broken out of this head and shoulder chart pattern neckline, came back to retest, and this is the overall TP support from the monthly as well. If you guys remember, let me just go back and show you guys so you can understand. So this is the support. I said markets will sell from the current price, they sell and go to this support. So let's go back to daily. So if I want to sell this market now, another confluence for a sell is on the daily. Market broke out, retested this resistance, although there is not much data here for second touch, but like I said, I believe this market will sell to this level. Let's put the last resistance. Came back to test, and it will continue to sell. So when this market open, this is the we actually got in from here, from this resistance right here on Thursday. Yep. And like I said, my take profit is over here. So if you're selling, I'll put my short position. The only thing is you have to be careful. The market, if you are selling, the market may come back to retest this level or just continue to sell down immediately. So if you want to sell, make sure your stop loss is above. So in case the market comes back to retest that support level, you are still in the trade because you didn't enter when you're supposed to enter right here. So if you want to sell at the current price to this level, you can sell, but make sure you calculate your stop loss from the current price, if that makes sense. This is the current price. So if you are entering from here, make sure you calculate from the current price to this stop loss right here. So your risk to reward on this trade will be 1 is to, let's see. So 1 is to 5. Yep. So you are risking, let's say that's like, because this is daily, this is like 500. Okay, this is like 300 pips. Yep. This is 300 pips, and you are risking 187 pips. So if you are using 0.1, if you are buying from the current market price, you'll be risking $187 to make 340 something dollar. So that's why I said sometimes for me, I may not, even if I want to trade this, I may go down to 1 hour time frame to see if I can get a little pullback before entering. And this is what I mean. Instead of entering at the current market price, at this current market price, I may see if price will, I may decide to use the Fibonacci to see if price will, oh, let me delete this, will pull back a little bit, unless I don't mind risking that much stop loss. If I feel like price will still pull back, I may draw a Fibonacci and let price pull back to this 38 or 50% level. I'll put my support line. Price may come back to retest this 38 level, I may enter from this level. I may set my sell limit to this level, so that way I'm still getting more discount instead of entering sell immediately. So I may let it come to this level and then continue to sell down. And as you can see, market has tested that resistance well as well. So if I want to sell, I'll set a sell limit for USD CAD to this level, let it pull back to here, so at least here before selling, if that makes sense. So that way you are reducing your stop loss. That's the power of Fibonacci. So that's pretty much it for, and this is 1 hour. That's pretty much it for USD CAD. And then let's look at the stock market for next week. Oh, okay, everyone's favorite, gold. Let's look at gold. We took some buy position last week on gold, and we made profits with my May students. Let's see gold. Okay, let's go to the monthly. Let's do our top down analysis. So this is how the monthly candle closed. This is the highest level gold has gotten to. Hopefully this video will not be too long. Whew, I spent too much. Let's see. So there was a rejection on April candle, and even this May candle, like I said, market didn't, you can tell from the DXY, market didn't really do much this May. It actually started as a crazy tough market. It was only the last week that I can say, okay, market gave us good opportunity. One time it's going up, one moment it's coming in, it's going down, especially with the news. It's been crazy. So let's see. So we can see on the monthly, let me go back on the monthly. If you guys remember, I showed you guys DXY. Dollar was on an uptrend, but as dollar was on downtrend, I mean, gold has been on uptrend. So let's see, and it got to this level, and now it's pulling back on the monthly. So let's see if the trend will continue on, or it will continue to sell off. And like I said, is negatively correlated with the dollar, but sometimes it can be weird. They correlated like 90% of the time, but sometimes I've seen times where dollar is buying and gold is buying, dollar is selling and gold is selling for that day. So it can be weird sometimes, depending on what's going on in the world. Gold is influenced by news, not just technical analysis. That's why you're like, but my technical analysis says it's going to buy. Sometimes something will just happen somewhere, like news somewhere, war, interest rates, different kind of news, like I showed you guys earlier on. All the news in the world that's happening, they can definitely affect the price of gold. So let's see, this is the daily time frame. So let's see, price pull back to this level. This is the highest level from the resistance that I drew from the monthly, I mean. So this is the last support price pulled from. There is a support here as well. So let's just try different conference. So there is okay, perfect. So there is a test of this trend line right here. Markets bought, sold, came back to retest, went up, came back to retest, went up to the highest level price has ever been to, then still came back to retest this trend line. So gold should, I feel like gold should gold should continue the trend to buy up, or even go to new all-time highs. New all-time highs means there is nothing here. Price has never been to that price before, ever, in this lifetime, in this world. And that's actually what gold has just did last month. This is the highest ever. This 3,500 is the highest ever gold has been to. So let's see this week on the daily. it's showing that price came back to retest this level. And if we are to draw our Fibonacci from this level, see, from this level, I'm just showing you guys different confluence. So you remember from the Fibonacci level, I said you pull it from the last low to the last high on an uptrend. So we can see price perfectly came to retest the 61, broke out a little bit out of the 61% retracement. And let's see. Okay, came back to retest here, and it's been going up since then. So let's see, let's go down to the 4 hours. Let's see if we can look for buy or sell. Let me delete the Fibonacci retracement once again so we can see the charts clearly. Let's go to the 4 hours for a more detailed, to see if we can get a more detailed and then if we go back to daily too, you can see that price created something like this. Let me see the trend line. Like it came to this support. There's like something we call triangle pattern. In chart pattern is one of the charts patterns and all that. So price came to this highest level, came down here, came down to like the 50% retracement. Let me just draw the Fibonacci level. Came down to this 50% golden level, and normally price went up. Price should have gone and break out from this level to create a higher high, because this is higher high, this is higher low, this is higher high, this is higher low. Then price should have broke out, but price could not break out, and then it sold back down off to this, let's say 61% retracement, and price is now going back up. So that's why I said gold has been very, 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 very tricky, because let's say the price was here at this resistance and you were predicting a pullback, and it actually did pull back to the 50%, and you were buying thinking, oh, your take profit should be to this last resistance. And what the price do, if you didn't get out, price sold off even to after your entry, which would have been a huge loss, after going up to like $2,000 or even more. Yep, over $2,000, and it sold off like $3,000 from $3,004 to $3,001. If you are using 0.1, that's $3,000 move, and now it's going back up. So like I said, let me delete this Fibonacci. So in triangle pattern, there's something to look out for. Triangle pattern is a neutral pattern, which means price can do anything. Price can decide to break out to go up from here, or price may sell out from here. So I suggest, if you are trading gold, especially this week that there is NFP this week, which is the non-farm payroll on Friday, the first Friday of the month, I will be very careful trading gold, because that affects the price of gold as well. So you can see and wait. I'm actually already in sell on gold, because I was in a buy, and then price reversed on the smaller time frame, and I'll show you guys what I mean. So I closed my buy, and that's why you see this bearish candle for Friday. This is Friday candle. So price may decide to come back and retest this trend line again, or just break out from this trend line and come back to this level. And if you break this level, it's going to form a new high. So let's see, let's go back down to 4 hours. So in the 4 hours, price is creating higher high, higher low. So there's a resistance here. Let's see. And I actually caught this buy from this level. I caught it with my April student. We're in this buy from this level, and price got it to this level, and because we moved our stop loss into, I think, like around here, price decided to come back and form something like a double pattern, and it took us all out. It took us our profits, but not much profit. And since then, price went back up, couldn't break this resistance, sold back down again and finally broke this resistance, and sold back down again and finally broke out of this resistance of this triangle line, did like a fake broke out, and it still sold back down again to retest this resistance line right here, and then it went back up, and it should have gone, and as you can see, it should have gone and come to this level, to at least this level, but price sold back into this chart, this triangle pattern. So it's kind of tricky. Like I said, it may decide to go back up from this level and also back down to this level, and if it breaks this level, it may definitely come to this to retest this trend line, like I said. So I'll be definitely watching when the market opens to see what's gonna happen for gold. So like I said, if I want to buy, I'll definitely wait for price to break out of this level. So let me put this here for you guys to understand what I mean when you are neutral on markets. So you do this is what we do. So you are not just looking at one direction. My stop loss will be here if I'm buying. So my entry will be right here if price break out of this level of this triangle. So if price break out, I will definitely be watching to see. My first take profit will be here. That is from 3,301 something to 3,300 and something. That's 500 pips. So if you are entry from this level to this level, that's 500 with 0.1, that's $500. And if you break this level, it will definitely come back to test this level. And if you break, it's definitely go to the 3,005 that is sold from. So my first TP will be here. If you break out of here, I will definitely ride it to this level, to the highest level, 3,004 and all that. And like I said, since I am neutral, if price breaks out of this level, this short, if it breaks out from this level, then I'll let it break this support. That's the perfect time to enter. Let it break this support. If it breaks this support, my trades will open, and I may ride it to this level. But the short position is just tricky, because if you are to trade the triangle pattern, it's better for you to let it break this triangle pattern right here, and then you sell it to this last support. So to be conservative, let's see, short position will be from here. If I want to enter short, the best way to enter is from this level. If this triangle pattern break, my support, my stop loss will be here. And if this happened, whew, that's a lot of money right there. That's like how many risk to reward? That's 1 to almost 3%. So if I enter from this level to this level, that's from 3,170 something to this level, that's 1,007, almost $1,800. If this happens on gold, if gold breaks this triangle pattern that I did, it's gonna definitely come to this level. So that's pretty much it for gold. So we have up and we have down. So that's how to trade triangle patterns. So let's see for the stock market. Let me quickly go over the stock markets. SP500 for those who trade indices. SP500. SP500. See. Hopefully I'm on the right one. Okay, I think I'm on the right one. So let's go to the monthly. So this is the highest resistance, and I'm still bearish, honestly bearish on indices too, because if they are positively correlated with dollar. If dollar is weak, that means the economy of America is weak, and that affects the stock market as well. So there is like a double top here. Market sold off all the way, and there is like a pullback going on here or something. And markets is, everyone is saying, oh, market is going to back to the all-time highs, but I honestly don't think so. Since I'm bearish on dollar, I honestly don't think markets will go back here, but we'll see. But like I said, I am bearish on SP500, on Nasdaq, on US30. So if you are someone who trade this, this is the daily time frame. Let's go to the monthly top down analysis. Let's see. So even this month's candle closed with a rejection. So we can see this rejection, this inverse candle, rejection candle at this resistance. This is the highest level that it got to, and it formed this inverted hammer, this doji candle, and there's the bearish candle after that, and price sold off. Look at this perfect thing. Price sold off perfectly to this resistance right here. And then there was a pull, there was a big buying pressure right here, and it came back to this start of this bearish candle now, and there is a rejection. So price may continue to sell back down from next month, and if it doesn't, if it breaks this level, it will definitely, it may go up to $7,000. And in the next coming prediction, I'll show you guys how I'm able to predict. If there is no data, if price is going to a new high, I'll show you how to use we have Fibonacci retracement for trading pullback, and we have Fibonacci extension for predicting where price will go to if there is no data, if there is nothing to look out for, how to look out for. So I'll show you guys in the next prediction lesson. So let's see. So let's go back down now to daily. We don't need to go to the weekly. Let's go to the daily. So on the daily, on Thursday, we can see this doji candle at this resistance level, and then this candle, this neutral candle, like this. Let's see. Let's go back to the 4 hours for a more detailed analysis because of time. See, so if I'm selling this market, so this market came to this support right here. This is the last support. If I'm selling from the current market price, I'll sell to this level, and if I'm buying, I'll let it break this level. I'll sell to the all-time high, which is the 6,000 something. And if it break from the monthly, like I said, it may go to 6,000. My first prediction would be $6,300, or let's say $6,500. It may come to this level, and if you break that level, it will continue to go up. So like I said, if I'm selling, but if it sells off, like I said, I'm bullish, because I am seeing a bearish reversal right here on the 4 hour. I'm seeing like a breakout. Let's go to the 1 hour. Let me go to the 1 hour. I'm seeing a breakout here. Yep, there's like a breakout here, and markets went to retrace the trend line, and it may continue to sell to this level right here. So if I'm selling, I'll sell to this level. Let me put my short position here. Let's see. And indices is not on MetaTrader. If you are still trading demo, you can trade it on, you can open SNES. If you're in Nigeria, open the SNES demo account. If you want to trade indices, open SNES demo accounts, and you can trade indices and all that there. And let's see. So my first take profit level will be this support that price pull back to. This will be my first, because it may come here to form a double bottom and then decides to go back up. So this will be my first from the current market price to here. And if it breaks this support, I'll sell to here. And if you break this support, I will definitely sell to I will look for the for another support on the higher time frame and continue to sell. But for now, this is my prediction. And like I said, if it breaks this level, if it breaks back up to this level, I'll buy from here to this, back to the all-time highs. My stop loss will be here. So that's pretty much it. And like I said, if S&P 500 is selling, is predicted to selling, they are all correlated. Definitely Nasdaq will be selling. If Nasdaq is selling, definitely US30 will be selling. So the three of them are correlated. And German 30, all of them, most of them are correlated. I don't trade all those German 30. I trade US30. Because US30, apart from gold, US30 is my love. Nasdaq is my love as well. S&P 500 is my love too, but it doesn't give me money as Nasdaq and US30. If you know, you know. I mean, the contrast size is a little low than US30 and Nasdaq, but it's very volatile. The indices market is very volatile. So if you don't know what you are doing, you can definitely blow your account. So make sure you calculate your stop loss and risk before you enter. The indices markets, the crypto market and gold, they are all very, very volatile markets that if you have a small trading account, like, it's very, very hard to trade. So like I said, let's not waste our time. If this actually on Nasdaq, let me see, the structure is a little different on Nasdaq, but like I said, since DXY is bearish, I'll be looking for bearish stock markets as well. So same thing, if I'm selling, I'll sell to this level. My first take profits will be here. If you're selling Nasdaq short position, and I caught this market from this level, I sold to this level and I got out before this pullback. And how did I know? Because I actually got out here. Yep, I got out from, I caught this market, I caught it from this resistance, and then I got, because I know there is a support here, so I got out. So market just pierced it a little bit and came back to retest this trend. I can still be in the trade, but my, what is it called, my profits was important at that time. So if I'm selling, my first take profits will be here, back to here, and if it breaks, I will definitely sell to this level, and if it break, we'll continue to ride it. So that's pretty much it for this analysis. Hopefully I covered everything, and I'll see you guys next week in next week analysis. Thank you so much for watching. This video will be public, so kindly share with any traders out there. Like this video as well, so YouTube can recommend it to other traders out there. Have a wonderful trading week. Bye.